Hi, dear students. Hope you are doing well. We are going to do the revision of company audit, CARO, and audit in automated environment. CARO revision was actually supposed to be done with the bank audit part, but because of some technical issues and other reasons, we lost a little bit of time there. So I could only cover the bank audit revision. So CARO revision, I'm doing it here. Okay. So let's do this area very nicely. This will be company audit plus CARO, and we'll ensure that company audit, CARO, and audit under automated environment. So let's do it in a very nice manner. Let's start with it. Before we start with our main revision, just want to tell you all regarding the batch that we are having on Unacademy and all the details that you need to know. Okay, just a second, please wait. Okay, so we are having the CA iconic program on Unacademy, a flagship program for CA intermediate aspirants. Now, it is a live mentoring platform, okay, and where one-to-one personal coaching, one-to-one doubt solving. Then after that, you will be having your evaluated test series, printed books, industry expert sessions, and Discord, which is basically a community building session. Along with this, we'll also be providing live classes, weekly tests, study materials, unlimited access to the content, and the structured courses. One-to-one live mentoring in Iconic. Give your exam prep an extra edge with the new LMP, that is experience personal learning like never before. Discuss your doubts, get customized study plan, and finally articleship guidance to help you leave your mark in the professional world. We have the evaluated test series. What is this about? Give your exam prep an extra edge with our latest edition in Iconic subscription. After 40% of the portion is over, there will be one test taken. After 80% is over, one more test will be taken. After 100% portion is over, one more test will be taken. Tests followed by analysis class and detailed evaluation of answers by subject matter experts, and get personal guidance and feedback from experts basis your performance. For the Iconic subscription, for the 12 months, the fees are 3188 per month. You can use the code YESHAS Live for this purpose. For the Iconic subscription, if you want to go for a combo, that is CA Foundation plus CA Intermediate, for the 24 months, it is 2750 per month. Okay, you can again use the code YESHAS Live. Finally, we have the CA Foundation Mega Combat, that is at tomorrow, that is 28 November at 12 p.m. To do attend that. 60 minutes, 40 questions will be ours. Experience the live battle and win scholarships up to 100% scholarship from a pool of 1 crore plus. Lucky draw for participants, 100 lucky participants to win surprise gifts. And rank 1 to 3, 100% scholarship, 4 to 10, 70% scholarship, 11 to 50, 50% scholarship, and 51 to 150, 25% scholarship. You can also get a chance to win iPad mini, Samsung tab, Fitbit Versa 2, JBL speakers, and Amazon vouchers. Okay, enroll now for the YESHAS Live batch. Okay, now let's go ahead and let's do our revision of company audit first. Okay, let's start. So this is the revision of company audit. Let's go in a very organized manner, in a very orderly way, and do the revision of this easy chapter. Okay, let's see this. Now, first of all, in the class, we had seen that, sir, person ineligible to be appointed as an auditor, 141 subsection 3, read with rule 10 of the company's audit and auditors rules. Okay, it is given here. So let's see this first. One second. So here, what do we see? Clause A, that is body corporate. Okay, body corporate cannot be an auditor. Then in clause B, we add any officer or employee of the company cannot be an auditor. Okay. Now, officer definition is given in section number 2, subsection number 59 of the Companies Act, where they're clearly given DIMCA. DIMCA means director, manager, KMP, and any other person on whose direction the board of directors are accustomed to act. Now, KMP is given in section 2, subsection number 51. It is defined there. That is basically MWM, CCC, lower arrow, managing director, whole-time director, manager, CEO, CFO, CS. And any person on whose direction the board of directors are accustomed to act. Any person on whose direction the board of directors are accustomed to act. Okay, all these people will be considered to be your you're supposed to be your officers. Okay. Now after this, you have the employee of the company also here. Okay, so remember the employee of the company is also here. So clause A talks about body corporate, clause B talks about officer or employee of the company. Then we have clause number C. Clause number C says that any partner or employee of any officer or employee of the company cannot be an auditor. Okay. So any partner of the officer or any partner of the employee or any employee of the officer or any employee of the employee cannot be the auditor. That is what they have shown it here. We have already seen many examples in relation to this in the main batch. Okay. After that, we go to clause number D. Okay, now let's see what clause D says. Clause D, very easy. What it says is holder of any security or interest in cash S. If a person is holding any security or interest in cash S, then that person cannot be the auditor. Okay, but they have not only said about himself, they have also said about the partner and relative. Now himself or partner, they are saying, so neither me nor my partner, we should not hold any security or interest in cash S. What do you understand by cash as? Company, associate company, subsidiary company, holding company, subsidiary of such holding company. They should not be holding this either in the company, associate, subsidiary, holding or subsidiary of the holding. They should not be holding any kind of securities. Relatives also, just a second, please wait, there is some issue. Okay, I think there is it was blanking out and again coming back. So relatives also cannot hold shares, but they have said permissible limit for relatives is up to face value 1 lakh. Can the relatives hold shares up to face value rupees 1 lakh? The answer is yes. But however, if it exceeds face value rupees 1 lakh, then corrective action should be taken by the relative within how many days? 60 days. Okay. Next is if himself, partner or relative, okay, if they are indebted for more than 5 lakhs to cash S, then it is the person who is himself cannot be the auditor. Okay. So if me or my partner or my relative, if they are indebted for more than 5 lakhs to cash S, then I cannot be the auditor of the company. Okay. I'll be showing an example in relation to this. Please wait. After that, we have guarantee or security exceeding 1 lakh to cash S. So if himself, partner or relative give a guarantee of exceeding 1 lakh to cash S, then again, I cannot be the auditor. So if me or my partner or my relative give a guarantee to company, associate company, subsidiary company, holding company, subsidiary of such holding company for an amount exceeding 1 lakh, then I cannot be the auditor of that company. Okay, very easy. Now let's look into this part, understand. So when I say indebted, what does it mean? Okay, indebted means what? So let's look at this simple example. Let's take this simple example here. Just a second. That completes clause D. Now in this cash S, you should always remember it is company, associate company, subsidiary company. See this: company, associate company, subsidiary company, holding company, and subsidiary of such holding company. Okay. The next point is in relation to clause E. Okay. Now clause E is what? Any business relationship with cash S. But remember here you have the subsidiary of associate company also here. Okay. That is also covered here, except if it is a case of professional services or which are in the ordinary course of business. Okay, we had done this example in the class. Now, how do you remember clause E? Very simple. So we can remember this as e-business. So remember this as e-business. And with this business word, you can easily remember business relationship. Okay. So e-business, business relationship. Very easy. E-business, business relationship. So they have said here that the auditor should not have any kind of business relationship with company, associate company, subsidiary company, holding company, subsidiary of such holding company, subsidiary of such associate company. Then after this, we have the next point, that is clause F here. Okay. Now, what do you understand by clause F? Okay, let's see this. Now, with F, you will remember the word family. So with family, you remember one more word, and that is your relatives. Okay, so remember relatives. So any relatives who are there in the company as a director or as an employee also as a director or a KMP, so they are I am not allowed to become an auditor. For example, if any of my family members or any of my relatives, okay, no relatives, is working in the company as a director or as an employee also as a director or a KMP, then I cannot be that company's auditor. Okay. Next is clause G. With clause G, we remembered a Hindi word that is called ghadi. Ghadi means watch. Okay, no, clock, time. Basically, time is a problem. Time, managing the time will be a problem for an auditor. So they have said here, if the auditor is in full-time employment elsewhere, correct, so he will not get time to do the audit of his clients, or if the person already has 20 maximum audits he already has 20 maximum audits per person. But in this 20 maximum audits, you will exclude the small audits. Okay, so what are audits will you exclude? The pods you will exclude. Okay, what are the pods? So if a private company is there having a paid capital of less than 100 crores, sir, if a one-person company is there, if a dormant company is there, or if a small company is there, these companies will not take in the counting of 20. Correct? Very simple. After that, we had clause H. Okay, now clause H we had remembered with the word horrible. Okay, now we had remembered with the word horrible because there's something very, very horrible associated with it. And what is that? That is fraud. Okay. So if there is fraud that has happened and 10 years has not elapsed from the date of conviction, then they have said, then it is a very horrible thing. Okay. So then they're saying that, okay, first you have to look at whether fraud has happened, then you have to look at the date of conviction. And from the date of conviction, you have to calculate 10 years. You have to calculate 10 years. And whatever date comes from for till these 10 years, you cannot be an auditor in any company. Okay. Very easy. Now the next point is clause I. With I, we sing a song. So I'll just write here iTunes because we are going to sing the song. Which song are we going to sing? The rock on song. Correct? No, rock on song. But what is the base? Now, before I get into the rock on song, what is the base of the area? So if the auditor or any of its subsidiary companies, associate companies, any other form of entity, if they are providing any services to the company, holding company, to a subsidiary company, sir, then in these cases, no, sir, and then in these cases, we cannot provide what do you call, if I'm the auditor of the company, let's say I'm the auditor of this company. Okay, so if I'm the auditor of the company, I cannot provide, or any of the entities which are associated with me, that is auditor, subsidiary company, associate company, or any other form of entity with which the auditor is involved, they cannot provide section 144 services to the company, to the holding company, to the subsidiary company. We cannot provide these services to all these entities. Very clear, very simple, easy to understand. Okay. That is basically this area. Now, this we had done the list of things that we do is basically we had sang a song. Okay, what is that song? That is a rock on song tune. Okay, so let's sing the tune directly because you must have attended the tune in the class. Okay, let's see this. 1, 2, 3, start. Design and implementation of any FIS, accounting and bookkeeping services, actuarial services, rendering of outsourced financial services, investment advisory services, investment banking services, management services, internal audit, and any other kind of services as may be prescribed. Okay, so we had sang this song in the class. So with this, you can easily remember section number 144, that is the services that the auditor cannot provide. Okay. Now, one or two few areas. Okay, let's see this. First of all, this is your subsection number 3. Okay, so I'm just writing here. See, 141 is divided into 3 main subsections. Subsection number 3, you already know, it deals with what? Disqualifications for appointment. Okay, 3. Then you have 2, and also at the beginning you have 1. Now, subsection number 1 says that if an individual is a CA, he can be a he has to be a chartered accountant in practice. If a partner in a if there is a partnership firm, then majority of the partners should be CAs, plus they should be practicing in India. Okay. In clause number 2, we see, or subsection number 2, I should say, we see that in the case of an LLP, only a CA is authorized to sign an act. Okay. So if the majority are also not majority of the partners are also not CAs, it is okay. But the person who is doing the work should be a CA in practice, and he should have only acted and signed, okay, on the audit assignment. Then he can do the audit. Okay. So remember that. And subsection number 3, you already know we had done this entire thing. Okay, very easy. So just for a quick recap, A is body corporate, subsection number 3, clause A, body corporate. B is officer or employee of the company. C is partner or employee of any officer or employee of the company. D is in relation to HINGS, if you remember, holder of any security interest, indebted for an amount exceeding 5 lakhs, guarantee security exceeding amount of exceeding 1 lakh. Now, this entire clause D is applicable to company, associate, subsidiary company, holding company, subsidiary of the holding company. Similarly here and similarly here. Okay, very easy. Here, 1 point, remember, relatives can hold up to face value 1 lakh only in the company. Only in the company, not in the associate, subsidiary, holding, or subsidiary of the holding company. In associate company, subsidiary company, holding company, subsidiary of the holding company, relatives are not allowed to hold a single share. Okay, but only in the company they can hold shares up to face value 1 lakh. Very clear, very simple, yes or no. Okay, so this completes this area. Okay, very simple. Now, after that, we went into E. E is E business. F is family. So with family, you'll remember relatives. G is Ghadi. Ghadi means time. So audit has no time because he is full-time employment elsewhere. All he already has 20 maximum audits. In 20 maximum audits, you will exclude what pods. H is horrible. Horrible means fraud, and 10 years is not elapsed from the date of the conviction. And then after that, you have I, that is your rock on song tune. That is what we sang. Okay. Now I promise to you that we are going to see one example in relation to this, this, and this. Okay. Now this is very simple. This example, it can be verbal also. Very simple. If I'm holding shares in any company, I cannot do the audit of that company. If I'm holding shares in a holding company of one company, then I cannot be the auditor of that company because I'm the holder of shares in the holding company of that company. Clear? Next is, if my partner is also in the same situation, he cannot do the audit himself also. Next, we are looking into the relatives part. So understand now, if there is a company called A Limited, okay, no. Now, if my relative, let's say my brother, is already holding shares worth rupees 3 lakhs in A Limited. Okay, so but if now I have got the appointment of auditor, the opportunity to become the auditor of a company at A Limited, then my brother, no, he should bring down his face value from 3 lakhs to 1 lakh. He can maximum hold up to shares of 1 lakh only. Okay, that is basically called as corrective action, that is bringing down the face value of shares from 3 lakhs to 1 lakh. Okay, maximum is allowed to hold is up to 1 lakh. Exceeding 1 lakh is a disqualification. For if the relative is holding exceeding 1 lakh, then corrective action has to be taken within 60 days. If not taken, then I have to vacate the auditor's position. Okay. Next is now indebted. Now understand an example in relation to indebted. Now let's see here. Please see. Now understand here that there is a company, let's say, called as B Limited. Okay. B Limited as an holding company, let's call it as A Limited. It has a subsidiary company called as C Limited. It has an associate company called as D Limited. Okay. And let's just the holding company also has a subsidiary called as, let's say, E Limited. Okay. So the situation is like this. Now here it is me who wants to become the auditor. It is me here who wants to become the auditor. So what they're saying is, see, if I want to become the auditor of B Limited, if I want to become the auditor of B Limited, then they are saying here basically that neither me or my relatives or my partner together, we should not have any indebtedness of more than 5 lakhs. Okay. So here you can see a partner here. Okay. And here you can see, let's say my relative. So there's a relative, let's say my brother. And here it is a partner, and here it is me means the auditor himself. So I'm writing H for himself. Okay. So what they are saying is, imagine now if C Limited has given a loan to the relative, that is the brother, let's say of 3 lakh rupees. A Limited has given a loan to the partner of, let's say, 2 lakh rupees. Okay. So you can understand. So 2 lakh and 3 lakh is given as the loan amount. Okay. Now 2 lakh and 3 lakhs. Now you understand, see, the amount should not exceed 5 lakh, but can it be equal to 5 lakh? The answer is yes. So in this situation, which I'm showing you in light blue, if the light blue situation is there, then can I become the auditor? The answer is yes. Okay. Now I'll change the situation here. Imagine that the my brother is holding shares of not face value 3 lakhs, is holding shares, let's say, of face value 3.2 lakhs. And the partner is holding shares, let's say, of 2.2 lakhs. So you'll understand here it is 5.5 lakhs now. Is it exceeding 5 lakhs? The answer is yes. Now can I become the auditor? The answer is no. Now you cannot become the auditor of B Limited because it is exceeding 5 lakhs. Very clear? Now, so basically, what are the questions that you ask? What are the areas that you question about? Sir, very simple. We first see that who is getting a loan. Okay, who is getting a loan? So first of all, HPR should get a loan. HPR should get some kind of a benefit from cashes. Okay, no. So this is basically who is getting loan. Correct. Second is your cash as companies are the companies who are giving loans. I'm writing here who are giving loan. Okay, are we seeing together? Are we counting all these companies in combination? The answer is yes. That is what I explained to you in the class also. So that is why we are doing 3.2 lakhs plus 2.2 lakhs. Correct. So who are giving loan? We will be checking that, and we have to take that in what? Aggregate. Okay, so I'm just writing here in bracket aggregate. You have to take aggregate means total combined base, cumulative basic. Okay. Third is, and the final point is, sir, what should be the amount of it? Okay, now so the amount has to be, because we are taking an aggregate, the aggregate amount, if it is exceeding 5 lakhs, then I cannot become the auditor. If the aggregate amount is up to 5 lakhs, can I become the auditor? The answer is yes. Easy, simple, very easy. Okay, that is basically this area. Now the next part I'm going to teach you all is in relation to your next part, that is guarantee security. Okay, so let's see an example in relation to this. Understand this example. Okay, this example very important. Okay, Understand this example, how it flows. Imagine the same companies I'm writing here. Okay, so same companies. Let's say there is A Limited here. Okay, B Limited is here. Okay, this is the structure. Now here also same structure I'm drawing. There is himself, the person who wants to become the auditor. This is the partner here. Okay, and this is the relative. Okay, so you understand this. Now think about this. There is a random third person who went to A Limited, asked for a loan. Okay, and that person did not get a loan, so he was very sad. So this person met the partner. The partner said, "Oh, don't worry. Which company is it?" So that person said A Limited. So the partner took this person to A Limited and requested A Limited to give a loan of, let's say, 70,000. Okay, no, 70,000. Okay, and this person tells the company, "See, if this person doesn't pay you the amount, no, then I'll pay you the amount of 70,000." So he's taken a guarantee of how much? 70,000. Very clear. Second thing, let's say there's a relative and there is this D Limited is there. Okay. So there is a person who went to take a loan to D Limited. He did not get the loan. He did not get the loan. He was crying. So my relative, let's say my brother, he has a very big heart. So he went to this person and said, "Hey, why are you crying?" So he said that D Limited is not giving me the loan. So what this relative did is, the relative, that is my brother, he took this person to the D Limited and told D Limited to give him a loan of, let's say, 60,000. Okay, 60,000. And this person, no, he has given a guarantee to the company. He has given a guarantee to D Limited. Okay, no, he has given a guarantee to D Limited. Okay, of what amount? Of an amount, let's say, of again, we'll take it as 40,000. Okay, 40,000 is a guarantee amount. Okay, only 40,000. Now they have said guarantee or security exceeding 1 lakh rupees. Okay, no. Now see, you have to ask a question. The main fundamental question is what? Sir, can the person himself become an auditor of this B Limited? Can he become the auditor? You guys will tell me the answer. The answer will be what? The answer will be no, sir. Why? Sir, because guarantee amount 70,000, your guarantee amount is lesser, and it is 40,000 for a loan taken of 60,000. Sir, so 40,000 plus 70,000 will give us a guarantee amount of how much? Guarantee amount of, sir, 1.1 lakhs. 1.1 lakh. So 1.1 lakh, you understand, becomes the amount exceeding 1 lakh. So first of all, this condition will be satisfied. The amount should exceed 1 lakh. Okay. Now the same funda applies. Now next point is what? Sir, who is getting the loan? Okay, understand who is getting the loan. So I'm writing here random third party. Okay, random third party is getting the loan. Correct. So random third party is basically who is getting the loan. Who is getting loan? Now, who is giving guarantee? Who is giving guarantee? Okay. So who is giving guarantee? So we are looking at guarantee. Okay. So who is giving guarantee in this case? So the guarantee is being given by who? So the guarantee is being given by himself, partner, or relative. Okay. So himself, partner, or relative should be giving the guarantee. Now the third point. Sir, the next question that we have to ask is who is giving loan? Okay. Who is giving loan? So that will be simply cash S. Very simple. Company, associate, subsidiary, holding, subsidiary of such holding. Okay, cash S. So you understand in this way, in a very simple way, you understand that, sir, in this case, we can easily see that we have to not check 3 conditions, we have to check 4 conditions. And that is, and one simple condition which is extra here, that is who is getting the loan, who is getting the loan. Very clear. And that can be a random third person. Random third person does not make a difference to us. Very clear. So these are the examples that you should keep in mind. Remember, this is 141 subsection number 3 clause D, and this is your sub clause 3. Okay. Next is your 141 clause 3, and this is your 141 subsection number 3 clause D, and this is sub clause number 2. Okay, sub clause number 2. Very clear, very simple. Okay. Now this is where I would like you to just go through it in a very nice way. Okay, go through this diagram which I've given in a very nice way. If there is any query, you ask. Okay, I'm giving you exactly 3 minutes of reading time. Okay, 3 minutes. The thing is, otherwise you will forget. Okay, so and I understand this is just before the exam revision. So you please go through it. Please go through the first chart in a nice way. Just go through the overview of it. I've already explained. If you have any queries in relation to this, you ask me. After that, we'll go to the second chart. Okay, so please do the needful. Okay, please do it right now itself. Please go through it. And student, because this video is on YouTube, what you can do is simply pause the video, go through it, and then after that play, and then you will see the next topic. I'll be starting with that. Okay. Now let's continue with section number 139 of the Companies Act. Okay, now let's see this. Now section number 139, what does it say? Okay, first you have to see whether the company is a government company or other than government company. Okay. Now where is it defined? It is defined in section number 2, subsection number 45. Okay. If any company in which more than or equal to 51% of the paid up capital is held by the central government or state government or state governments, or partly by the central government, partly by the state government, and it includes subsidiary of a government company, then that company is called as a government company. Okay. Now, first you identify whether what kind of company it is. Okay. Then we'll see, what procedures are there in place. Now, first let's go into the company which is other than government company. Now, in that, for the appointment of the first auditors, we are going to look into the provisions. Now, for the appointment of the first auditors, the board has to appoint within 30 days. If the board fails to appoint, then the members will appoint in the next 90 days. Okay. Now, this first auditor will stay in office till the end of the first AGM. Sir, what about the auditor after the first AGM? Now, let's understand. The subsequent auditor who will be there will be appointed till the end of the 6th AGM. Okay, till the end of the 6th AGM. Now, that is given in Rule 3. So, you can see here manner of appointing of auditor, Rule 3 of the Companies Audit and Auditors Rules 2014. So here what are they saying? They're saying that simple, you have to follow Rule 3. Now Rule 3, what does it say? Let's go one by one. First, we'll see whether the company has an audit committee or not. Okay. Now the requirement to have an audit committee is given in section number 177, which says that if the company is a listed company, audit committee will definitely be there. If the company is an unlisted public company having a paid capital of 10 crores or more, then the audit committee will have to be appointed. If the company is having an outstanding loans, borrowings, debenture deposits of more than 50 crores, then audit committee will be in place. If the company is having a turnover of 100 crores or more, then the audit committee will be required. Now, when an audit committee is in place, it is very, very important that the company is doing its, the appointment of auditor is taken care by the audit committee itself. Okay. Now, in this case, they have said the audit committee will do something called as cake pay call. That is, qualification experience should be commensurate with the size of the company. Pending matters of professional ethics should be taken care of, and they can call for any other information from the auditor. Okay. Now let's say the audit committee gives a name. Okay, so audit committee, after it sees into a name, it will recommend that name to the board of directors. Correct. The board of directors, if they agree with that name, if they are happy with it, they will further recommend it in the AGM. Okay. But sir, what if the board of directors don't like the name? Then what is the solution? The board of directors, if they don't like the name, no issues, then the board shall refer back the recommendation for reconsideration, citing the reasons. So the board can do this, refer back the recommendation for reconsideration, citing the reasons. The board can do this. Now they have said here, if the board does this, then the matter again goes back to the audit committee. So audit committee can reconsider the matter. Okay. If the audit committee reconsiders, the name, then again the procedure will be followed. They will suggest a name, recommend the name to the board. Board, if they likes it, recommend in the AGM. If not, they'll again give it back to the audit committee. All these things will go on. But what if the audit committee says we are not going to reconsider what the name that we had given originally? We are going to stick with that. So basically, the audit committee does not consider another name. Okay. So the audit committee is telling that we are going to stick with the same name. Now you decide what to do. So here the board can show its power, and the board can record the reasons and send its own recommendation in the AGM. Record the reasons and send its own recommendation in the AGM. Very clear, very simple. Okay. Now basically the matter will be in the AGM, and you will understand. Okay. So one more area, just a small point I forgot to say. If section 177 is not applicable, okay, so it means audit committee will not be there. If audit committee is not there, then all this area of qualification, experience, commensurate with the size of the company, pending matters of ethics, calling for any information, all this information will be done by the board of directors itself, and they will just recommend the name in the AGM. That is it. Now, at the AGM, before the appointment of the auditor has to give his consent and certificate. Okay, I hope you can see it here. Okay, before the appointment of the auditor has to give his consent and a certificate that he is not disqualified under section number 141, subsection number 3. Okay, no disqualification is there. And second thing, at the AGM, if the auditor is appointed, after that, the company will have to inform the auditor and will have to give notice to the ROC in 15 days and there is a specific form here, and that form is form ADT1. So in form ADT1, the ROC will be notified. Okay, very clear. Now this is the first AGM and this is the sixth AGM. So between the first AGM and the second AGM, there will be that is 1 year. Then 2 years are completed, 3 years are completed, 4 years are completed, and from 5th AGM to 6th AGM, 5 years are completed. So you understand that this is nothing but 5 years. This is nothing but 5 years, correct? That is basically the provision in relation to your the subsequent auditor's appointment. Okay, very clear. Now, can the auditor be appointed 11th AGM? That depends whether it is a proprietorship firm, partnership firm. We'll look into that. Wait for it. Now, the next part is, that is, can you see this line which is coming like this? Okay. Now, this is when the casual vacancy happens. Okay, when the casual vacancy happens, that means, let's say, casual vacancy can happen basically because of two reasons in other than government company. It can be because of resignation. It can be because of other than resignation. Okay. Resignation means auditor leaving by himself, or other than resignation can mean, death or permanent illness, something like that. So let's say if it is other than resignation matter is there, if other than resignation is there, then they are saying that then there is casual vacancy till the end of the next AGM. Casual vacancy will be there till the end of the next AGM. So we have to fill the casual vacancy. So who will fill the casual vacancy? The casual vacancy will be filled by the board within 30 days, and here members have not been given any power. So you understand that the board of directors have to fill the casual vacancy within how many days? Within 30 days. Okay. And the person who is there now will be appointed, the person who is filling the casual vacancy will be appointed till the end of the next AGM, that is till this AGM, that is the third AGM. Now at this AGM, okay, the subsequent auditor's appointment will again take place. So again, by following this rule 3 procedure, we'll appoint the subsequent auditor of the company. Okay, following the rule 3 procedure. Okay. Now let's go on to the next area. Let's see this. Now, if the casual vacancy is because of resignation, okay, resignation, then what they're saying is, see, if it is other than resignation, the board will appoint within 30 days. If the board has to compulsorily appoint because the members don't have any power. But if it is due to resignation, then they are saying the board will recommend, and within 3 months, the shareholders will have to approve the same. The shareholders will have to approve the same. Okay. So here what they're saying is, let's say if the resignation is there, then what is the duty of the auditor? Very simple, very simple. Let's see this first. The auditor will have to fill a form called as form ADT3. Okay. This ADT3 will have to be filled within how many days? Within 30 days. Okay, within 30 days. And this form will have to be filled by the company as well. A form will have to be delivered to the company as well as to the ROC. The auditor will have to fill a form called ADT3 within 30 days, and this has to be submitted to the company as well as to the ROC. If the auditor does not do this, then what is the penalty that is there in relation to this? So they have said here, let's see. If the auditor is not doing this, okay, does not give form ADT3 within 30 days, the penalty is here, but the penalty has changed. So what you can see on the screen has changed. So note this. The fine 50,000 is there minimum, or auditor's remuneration, whichever is less. This is exactly what I had explained to you in the class. Then they are saying from the next day onwards, if the fine is not paid within 30 days, if the fine is not paid, then this will be the if the resignation is not given within 30 days, then this penalty will be there. That is the 50,000 or auditor's remuneration, whichever is less. On that day also the payment is not made. Then they are saying from the next day onwards, every day 500 rupees will keep on increasing in the penalty. 500 rupees will keep on increasing. Okay. And then this will be up to a maximum of how much? 2 lakh rupees. Okay, 2 lakh rupees. So basically, what is the penalty now? It is 50,000 auditor's remuneration, whichever is less. And from after the leaving the first day, of not complying within this, this 30 days. So the first day after the 30 days, you leave that. Then after the next day, you will have to calculate for 500 rupees penalty. Okay, per person, 500 rupees penalty will be there. And total penalty can be maximum only up to rupees 2 lakhs. Okay, let's take a simple example in relation to this. Okay, so that you can understand. Let's say that the auditor has given his resignation on 1st of Feb. Okay, so I'm writing here 1st of Feb. Okay, 1st of Feb the auditor resigns. Okay, so you tell me, if 1st of Feb the auditor resigns, then it means within 30 days he'll have to give his he'll have to submit form ADT3, correct, to the company as well as to the ROC. So 30 days have to be calculated. Now 30 days, how do you calculate 30 days? Very simple. So how do you calculate 30 days? Very simple. So you have to see which month are we in. February, correct? February. Now let's say the year is 2021, because then it will not be a leap year. Okay, so if it is not a leap year, then 2021 is there. So in 2021, what will you take? Very simple. You will say that in February month, how many days are there? 28 days are there in February, correct? Normally 28. How many days have already passed in February? You have to just look at this day. Date of resignation is 1. So what you do is you do -1. So your answer will come to 27 days. Okay. So 27 days are covered here. Then for making it 30 days, how many days do you need in March? So you'll understand easily. So in March, we need how many days? 3 days. So you get 3rd of March. Okay. So this date which you get here is 3rd of March. So auditor has to give the resignation by 3rd of March 2020. Auditor will have to fill the form 83 and submit to company and ROC by 3rd of March 2021. Okay. Now, if the auditor does this, then no penalty, of course. But if the auditor does not do this, the immediate next day, on 4th of March, the auditor will be levied a penalty. Penalty will be how much? 50,000 or auditor's remuneration that he was getting for the audit work, whichever is less. Let's say the auditor was getting a remuneration of 70,000. So you will say 50,000 or 70,000, whichever is less. The answer is 50,000. So here the auditor has to pay 50,000 compulsorily. He has to pay 50,000 compulsorily. Okay. Now let's say that on 4th of March also the auditor did not deliver. See, 3rd of March he did not deliver the form 83. Okay, so that is why on 4th of March he has to pay the penalty. Let's say with the penalty he has to pay the amount will come to 50,000 or the auditor's remuneration, whichever is less. Now on 4th of March also he did not do the required work that is required to be done. He did not do that. So what they are saying is if he did not do that, no, okay, then what will happen is we have to see when he submits 83. Okay, let's say he submits 83 on, let's take 17th of May. Okay, let's take a random date, 17th of May. So what we'll do here is from 5th of March onwards till 17th of May. Okay, till 17th of May, he has not paid the he has not submitted 83. So 17th of May, which is there, no, that becomes the submission date. Let's say form 83 is given here on this date. Okay. So what they are saying now is, let's say that the auditor has submitted the form here, correct? So we have to calculate these days. Okay, that is from 5th of March to 17th of May. I'm very sorry for this. 1 second, please wait. So now you only tell me, how will you calculate the days? Very, very simple, very easy. So we don't want to include 4th of March, correct? So what will you do? How many days in March? 31 days in March. So do 31 minus 4. How many? 27 days in March. Okay, now you tell me in April, how many days are there in April? In April, sir, there are 30 days. So I'm just writing here April. I'll just straight away write 30 days. Okay. Now in May, in the month of May, when has he submitted it finally? 17th of May, he has given it. 17th of May, he has given it. So you will take how many days in May? 16 days in May, because it was the default up to 16th of May, correct? 17th May, he has already given it. So we'll now calculate. See, 27 plus 30 will give you 57, correct? 57 plus 16 will give you how much? 73. Okay, 73. So you get a total of 73 days. Now this 73 days, you will multiply it by 500 rupees. So 500 into 73 will come to how much? I think it will come to, I think 37. I think it should come to 37,500. I think so. Or I think 36,500. Just a second. Let's not confuse. Okay, 1 second. Please wait. 36,500. Okay. So 36,500 will come here. So I'm writing here 36.5K. Okay. Now this is the penalty that the auditor has to, the auditor will be charged for filing it late. Okay. So take this 36.5, add this 50,000 to it, because 50,000, remember, he has to pay in any case. The total amount comes to how much? 86,500 rupees. This is the final penalty that the auditor has to pay. This is the final penalty the auditor has to pay. And this amount, this total amount that we took, no, it should be less than 2 lakh rupees. That is why they have given here maximum up to 2 lakh rupees. So in no case, even if suppose the auditor instead of 17th of May he has filed on, let's say 17th of December. Okay, 17th of December. So that is too much of a gap now. So if you calculate that, maybe the amount will exceed 2 lakhs. But you have to understand that maximum limit they have put it is 2 lakh rupees only. So just keep that in mind when you are solving it in the examination. Okay. So that is basically this area. Okay. Now let's go ahead to the government company. In the case of government company, they have said the first auditor will be appointed till the end of the first AGM within 60 days by the CA and AG. If the CA and AG fails to appoint, the board will appoint within 30 days. If the board also fails to appoint, then the members will appoint within the next 60 days. Very clear. Then after that, they have said here, this first auditor will be appointed till the end of the first AGM. Sir, in the case of government companies, the auditor appointed for again 5-year period. The answer is no. So they have said here that subsequent auditor will be appointed within 180 days from the commencement of the financial year. Okay, from the financial year. So every year the auditor will be appointed. Okay, every year subsequent auditor will be appointed within 180 days from the commencement of financial year. So what about casual vacancy here? In the case of government company, they are not distinguishing the casual vacancy into two parts. We don't say resignation other than resignation, whatever situation it is, whether it is resignation or other than resignation, they are saying that that another auditor to fill the casual vacancy till the end of the next AGM will be appointed by C&AG within 30 days. If C&AG doesn't appoint, then the board will appoint within the next 30 days. If the board also doesn't appoint, board has to compulsorily appoint because members here don't have any power. Okay. Now, however, the resignation provision stays the same. Resignation is what? Simple. Auditor duty is to give Form 83 to within 30 days to the company, ROC, and also to the C&AG. And penalty has changed for this part as well. So you understand here penalty has changed here also. That is 50,000 or auditor's remuneration, whichever is less. And after the default is, if the default has already been made, then that is a penalty that you have to pay. And after the first day, okay, when the default is paid, okay, after that day also, if it continues, then you have to see the period of the continuous default is there for how many days. So it should be there. If it is there for how many days, it will be multiplied by 500. Then after that, we'll see the total penalty that is to be paid. It has to be maximum up to rupees 2 lakhs. Okay, the same penalty which I showed here, the same penalty will be here. Okay, so that is basically auditor's remuneration, whichever is less, plus 500 rupees per day. I'll just write it here, plus 500 rupees per day for continuous default. And maximum up to how much? 2 lakh rupees. How much? 2 lakh rupees. Very clear, very comfortable. Okay, that is basically this area. Easy, that completes this part. Okay, now there is provision in relation to rotation of auditor. I have a separate slide for it, so we'll look at that. Don't worry. Okay, so let's see into this. Very simple. So now, how do you remember this provisions in a very simple manner? Very easy. Sir, in the case of the first auditor to be appointed in the case of a company other than a government company, the board of directors will appoint the first auditor within how many days? Within 30 days. Board of directors fail to appoint, the members will appoint within 90 days. Okay, next 90 days. So in the case of government company, the C&AG will appoint within 60 days. Okay, that it is 6 for a reason. I'll show you the song. 6 for a reason. I'll tell you that. So if the C&AG fails to appoint, the board will appoint within 30 days. If the board also fails to appoint, the members will appoint within 60 days. Very clear. Now, in case of government company, it is given in subsection number 7. In the case of other than government company, this is subsection number 6. That is the appointment of the first auditor. Okay. Next is the your subsequent auditor is appointed under Rule 3 of the company's audit and auditors rules. And in the case of government company, it is 139 subsection number 5. That is within 180 days from the commencement of the financial year. You know this very well. Okay. Then after that, if there is a casual vacancy, the board will have to fill the casual vacancy within how many days? Within 30 days. If the board fails to fill the casual vacancy, then do the members have any power? The answer is no. Correct? No. So the board has to compulsory fill the casual vacancy. Okay. This is casual vacancy for other than resignation reasons. If it is resignation, you already know that board will recommend and the shareholders will approve within how many months? Within 3 months. Now, in the case of government company, if there is casual vacancy with the resignation, other than resignation doesn't make a difference. C&AG will appoint within 30 days, and C&AG doesn't fails to appoint, the board will appoint within 30 days. Okay. Now, entire casual vacancy provision is given in section number what? 139, subsection number 8. Very clear, very easy. Now, sir, what is the main intention of showing it in this way? Okay. Why have you written 39636 and all these things? Okay. So for that, you have to do one small, tune. For that, just ignore this this part. Okay. Subsequent auditor, ignore it, because students generally need help in remembering this, and all these, 30, 60, 90 days. All these things they generally need help. Okay. So let's do that. Just look at the screen and we'll sing it in a simple way. There's a simple tune. BM CBM 39636 30 dash 30 30 dash. Okay. All the students who have done with me, you know it very well. Okay. BM CBM 39636 30 dash 30 30 dash. Okay. In this manner, you can easily remember that the auditor's appointment is there for how many days. Okay. Very clear. Now let's come to this area, and this is in relation to your rotation of auditor. Okay. Now, rotation of auditor principle, let's look at the first applicability part of it. For listed company, it is 100% applicable. For unlisted public company, for a one-person company, not applicable at all. Okay. For small company, also no, that is not applicable at all. Okay. All private companies having a paid up capital of 50 crores or more, all unlisted public companies having a paid a capital of 10 crores or more, all companies, okay, all companies having public borrowing from financial institution, public deposit or banks of 50 crores or more, the rotation of auditor principle is applicable to these companies. Very clear, easy. Now, if I'm doing the audit of these companies, very simple. We had done this example in the class. Okay, I'm not going to go through the entire example, but we had done in a very simplistic manner. I told you all, if it is a proprietorship firm, the proprietorship firm can take up the audit of one term, and it is doing the audit of these companies, one of these companies, then it can take up the audit only for one term up to 5 years. Okay, up to 5 years. After this one term is over, that can be for any period up to 5 years. That can be 1 year, 2 years, 3 years, 4 years, 5 years. If one term is over, that is even if suppose if the person is a proprietary firm, okay, they got an audit of this listed company, they got appointed for 1 year. Okay, so after this 1 year is over, do they have to serve a cooling off period of 5 years? The answer is yes, because one term of up to 5 years, up to 5 years also includes 1 year, can be 1 year also. So you understand that they have to serve a cooling off period of how many years? 5 years. This we have done in the class. Next is, if it is a partnership firm. So in the case of partnership firm, we have to see that the partnership firm can take up the audit for 2 terms up to 5 years each. So can the first term be of 3 years, second term of 5 years? Yes. Can the first term be of 1 year, second term also 1 year? Answer is yes. So 2 terms of up to 5 years each. Okay, just remember that. Also, we go into the next part. That is, sir, in the case of so what if there are common partners involved? So if the common partners are involved, then the firm that is having the common partner and the firm which is not having the, where the partner has, firm which is having the old partner who had just completed the audit, and the firm in which this old partner only joins or is already a partner. Okay, no, both these firms cannot take up the audit. Okay, so cooling off period will be applicable for both these firms. Okay, that is what we saw in relation to rotation of auditor principle. Okay, finding it very easy, no issues. What you can do is again take a pause, go through the diagrams and see whether you are able to understand or not. Then after that, and as soon as you play, the next part will start. Now let's get into the next part, and that is in relation to your removal of auditor, section number 140. Okay, let's see this. Now, as you know, section number 140 has subsection number 1, subsection number 4, and subsection number 5, which are the important subsections. Now, subsection number 1 we are done in the class. This is where the auditor is removed in the middle of his tenure. Subsection number 4 is when the auditor is removed at the end of the tenure, and in his place we are going to appoint a new auditor. And the next is the auditor is removed by the tribunal. Now, subsection number 1, the provision, how did it go? Okay, let's imagine the chart. Okay, we have done the chart, right? So let's imagine the chart. So in this, first of all, board resolution will have to be passed. So after the board resolution is passed, the board of directors will make an application to the CG in form ADT2, okay, along with the fees. The CG will be waiting for the CG's reply. Now what they're saying is, the CG will have to give, after the CG replies or gives his approval that okay, this auditor can be removed. After the CG's approval is given or is received, we'll be calling for an EGM of the shareholders. In the EGM, we'll be passing a special resolution. We'll be passing a special resolution in the EGM, okay, extraordinary general meeting. Now, in the EGM, before we decide to remove the auditor, we have to give him a reasonable opportunity of being heard, okay, and only then the auditor can be removed. All these are the steps which are there in section 140, subsection number 1. Okay, if you are there with me, we'll be able to recollect our diagram and everything, correct? Next is in relation to 140, subsection number 4. Okay, and 140, subsection number 4, what happens? The auditor, we are going to appoint an auditor other than the retiring auditor. Means the auditor who has completed his tenure, we are not going to reappoint him. We are going to go with some other auditor. So first of all, a special notice will be sent to the company. Some members will send a special notice to the company. Company will forward a copy of the special notice to the auditor. Okay, now the auditor will have to give a representation in writing, not exceeding reasonable length, and request to notify the members. Correct? Now the company, if it has received this reply from the auditor on or before sending the notice of the AGM, then the company will send the notice of the AGM along with that the representation writing of the auditor will go along with that, and the notice also will be writing that, see, along with this notice we have also sent a representation from the auditor, written representation from the auditor. But if the representation is received by the auditor a little late, okay, received by the company a little late, or if there is some procedural issue in the company in relation to these areas, then the representation of course cannot be sent along with the notice. So we'll give the auditor the power to read the written representation at the meeting, okay, before the decision is taken. Now, in the in the next point, what they write in relation to this 140 subsection number 4 is that if the company or any person concerned, if they make an application to a tribunal, and the tribunal is of the opinion that the auditor has abused his right to give the written representation. Okay, now he has abused his right. Abused his right means the auditor has written some nonsense things and he has sent, okay, now to the company. So the tribunal has said that then such a representation need not be sent and it need not be read. So it need not be sent along with the notice. And if it is late also, then we need not read it also in the AGM. Okay, that is what they have clearly said. That is a 140 subsection number 4. Now we have 140 subsection number 5. What have they said here? Here they have said if the CG gives an application to the tribunal, or the tribunal suo moto comes to know about some matter, or if any person concerned, he makes an application to a tribunal, and the tribunal is of the opinion that the auditor has got involved in some fraudulent act or has abated or colluded in any fraudulent matter, okay, no, in relation to the company's directors, officers of the company, okay, no, so the auditor has got into this mess. So if this is the case, then the tribunal can give a decision to the company to change the auditors. And the auditor who is removed now, we cannot be the auditor for how many years? For 5 years. He cannot be the auditor for 5 years in any company. Next, they have said here that, see, if the application is made by CG no, then the tribunal will have to give the reply within how many days? Within 15 days. Tribunal have to change the auditor of the company within 15 days. And the CG may get the power to appoint the next auditor. Okay, the new auditor may get the power to appoint the next auditor. That is what they have said in section 140 subsection number 5, which you can see here, section 140 subsection number 5. Okay, very clear. So you have 140 subsection number 1, 140 subsection number 4, and 140 subsection number 5. Again, pause the video and then go through this entire area, go through the diagram that we did in the class. Okay, and after that we'll continue to the next area. Okay, please do it. Okay, now let's continue. Let's go to the next area. Now this is in relation to section number 143 subsection number 3. Duty to report. There is one more thing, that is 143 subsection number 1. I'll go to that. Rights of auditor, you can go through it. There are simple points in that. That is right to access the books of account, right to information explanation. All these points are given there. 143 subsection number 1. I'll come to it very soon. But let's do 143 subsection number 3 first. Okay. So here they have said that what are the duties of the auditor in terms of reporting. Okay. So they have said here that the auditor should first check whether the books of account is proper or not. Second, whether the financial statement, whether it complies with the accounting standards or no. Third, they have said here that whether the books of accounts and the financial statements are in agreement with each other or not. Agreement with each other. Very simple. Next, they have said here that is we have to then comment whether the branch accounts are properly kept or not. Okay, branch accounts are, returns are coming to the head office or not. Whether branch accounts details are maintained properly or not. Information explanation has been properly received or not by the auditor. This also received by the auditor or not. This the auditor has to report on. The auditor has to report on the internal financial controls in the company. But here some exceptions are there. Regarding these companies, the auditor need not report on the internal financial controls. Remember, the auditor will definitely check the internal financial controls, but he need not report for these companies. For which companies? Private companies having private companies which are in the nature of a one-person company. Private companies which are in the nature of a small company. Okay, this is repeated. Private company which has a turnover of less than 50 crores. Private company which has a borrowing of less than 25 crores, that is borrowing from BFB. BFB simply means bank, financial institution, or body corporate. Okay, this we have done in the class. So this part is very, very important. Internal financial control has to be reported, but these are the exceptions to it. Okay. Mark it as star, it can come in MCQs, it can come as a proper question also. So be careful. Next is the observation of the auditor. Auditor should give his observation in this case. Okay, what are his observation as an auditor? The auditor should amply give it here. Okay. Next is the qualification remarks of the auditor. Auditor should say whether in his opinion company has worked properly or not. Company has, if there is any adverse comments, then why such adverse comments have been given. So basically all the qualification and the adverse remarks should come with the reasons in relation to that. Next is if any directors are disqualified under section 164 subsection number 2, then the auditor should comment on this as well. Director disqualification under section 164 subsection number 2. Okay. Then we have a rule 11 of the company's audit and auditors rules 2014. Now here they have said in relation to 3 things. Okay, just instead of delay, we'll call it as late. In the exam you write delay only, but for remembering we'll look at late. Okay, we'll remember it as late. So just remember Lee, Law and Law. Okay, Lee, Law. Very simple. That is litigation, losses, and delay or late. Late in transfer to IPF. Okay. So if there is any litigation against the company, then the auditor has to comment on that. If there are any losses, material forcible losses which are there, whether the provision has been made or not, then the auditor has to comment. Third is if the company is late in transfer to IPF, the auditor has to comment on that. Okay. Finally, specified bank notes which are banned between 8th of November 2016 to 30th of December 2016. Okay, the auditor has to comment on this as well. Easy, very clear. So this is what they're talking about. So this is called as, basically we have a code called 3 binno ka dils. Remember 3 binno ka dils? 3 is these 3 points. Okay, no, these 3 points. That is, books of account should be proper, financial statement should comply with accounting standards, and books of account and financial statement should be in agreement with each other. 3 points. Then you have binno ka dils. See, BINO QUADILS. Okay, no, L and S. Binno ka dils. Okay, so remember this in relation to 143 subsection number 3. Duty to report. Now I'll take you to section number 143 subsection number 1. So here we had seen in relation to the duty of the auditor to make inquiries regarding certain matters. Okay, so duty of the auditor to make inquiries regarding certain matter. How does it flow? Very simple, sir. Sir, first you have to see in relation to loans and advances. Okay, loans and advances. So we say that if the loans and advances have been so it was LO, okay, LO square. Whether loans and advances, if the company has given to someone, whether they are prejudicial to the interest of the company, and whether the whether it is properly secured or not. These are the 2 points that we see. Next is whether loans and advances are shown as deposits or not. Okay. Next is in relation to, that is S. What is S? Simple. When the shares are allotted, we can say here there are 2 points with S. One is shares allotted for cash, and the selling. Let's go to the selling area. If the company has sold at less than the purchase price, so if the company has purchased any securities, debentures, or any other kind of shares, okay, no, and if the company is selling it at less than the purchase price, then that is here. That is selling at less than the purchase price. That is S. Then transactions shown merely as book entries which are prejudicial to the interest of the company. Okay, this I had explained in the class. A simple example can be depreciation. That is T. Then is when the shares have been allotted for cash, where the cash has actually been received, and if it has not been received, whether the position shown in the books is correct, regular, and not misleading. Okay. And finally, we go to the next area, that is P, that is where the personal expenses have been shown in the revenue account. So these are the 6 points that we deal with in relation to this part. Okay, the lost cap. Okay, so do this very well, very simple area. Now I'll take you to section number 143, subsection number 12. Okay, this is the duty of the auditor to report fraud. Okay, now regarding this, you have the diagram with you. Okay, just revise it with me. Okay, revise it with me and say it with me. See, in the course of performance of the duties, if the auditor sees a fraud, involvement of fraud of 1 crore or more, or a fraud where there is an expectation that the value will be 1 crore or more, what will the auditor do? Okay, so the first point is, if the matter is 1 crore or more, the auditor will make a report, and then will forward his report within 2 days, or will forward his report immediately or within 2 working days to the board of the audit committee. The company has a board of directors, and board of directors, if company has an audit committee, then to the if the company has an audit committee, then to the audit committee. If the company does not have an audit committee, then to the board of directors. So after the report is forwarded, we'll expect a reply or observation of the board or the audit committee within how many days? Within 45 days. Now this reply we need within 45 days. Now if within 45 days a reply is given, great. If a reply is not given, then it's not a it will be a issue for the auditor. Now let's imagine that the reply is given. Okay, if the reply is given within 45 days, then the auditor will have to, along with his audit report that he had sent earlier to the board of the audit committee, along with the audit report, plus the reply or observation given by the board of the audit committee, plus the observation of the comment of the auditor on their reply, the auditor will give it to CG within how many days? 15 days. Okay. Now, if the reply is not given in 45 days, what will the auditor do? Simple. Auditor will send the auditor's report, which he had earlier sent to the board of the audit committee, and he'll attach a note saying that no reply was received from the board of the audit committee within 45 days. And this will be sent to the central government. Now, in the central government, who do we give it to? Okay, so you have to always remember, in the central government, we'll first give in form ADT4. Along with form ADT4, we have to send in something called a lax. Okay, now along with that, we'll send the details in our letterhead. Okay, mentioning our postal address, email address, mentioning our contact details, the signature, seal of the auditor, the membership number of the auditor. All these things we'll give. This will be given in a sealed cover. Sealed cover. On the sealed cover, we'll be writing it to the Secretary, Ministry of Corporate Affairs. Okay, no, it will be sent by registered post acknowledgement due or by speed post, and we'll also send an email for confirmation. Okay. Now, this is in relation to where the amount is 1 crore or more. Let's say the amount is less than 1 crore. What to do? So the amount less than 1 crore, no problem, sir. Then what we'll do is we'll make a report and send to the board of the audit committee. The board of the audit committee will be sending them the report immediately or within 2 working days. The board of the audit committee will mention it in the board report. Okay, no. So regarding the nature of fraud, the amount involved, the parties involved, and if the remedial action is taken in relation to this, then what was the remedial action taken? If the remedial action is not taken, then only they'll mention nature of fraud, amount involved, parties involved. That is it. Okay. Now that is in relation to 143 subsection number 12, duty of the auditor to report fraud to the central government. Now in this case, there is a very important change, that is their amendment in relation to penalty. If the auditor does not follow this provision, then they are saying that the auditor will be penalized. If the audit is of a listed company, then the auditor will be penalized 5 lakh rupees. If it is other than a listed, any other company other than a listed company, then the auditor will be penalized 1 lakh rupees. Okay, that is what they have said. Also in this part, we always remember there is something called a 143 subsection number 13, which says that if the auditor has informed the central government in good faith, but later on they came to know, okay, the fraud was actually less than 1 crore. Okay, no. So then what they are saying is then the auditor will not be penalized because the auditor has worked in good faith. Okay, so that is what this point says in relation to 143. Okay, again 143 an important area, 143 subsection number 1, 143 subsection number 3, and 143 subsection number 12. Very important areas. Go through it very nicely. Other duties which are there are simple ones. You can just read through it. I've explained in the class. You can, the other duties you can simply go through it. But these 3 duties, let's go through it in a very nice way. It is very, very important. Okay. If you have any queries, you can put it in the chat area. Okay, I'll be very happy to solve the issue. Okay. Now after this, we are going to go into the penalty part, and I'll explain you the penalty part properly. Okay. Now let's see the last area in relation to the penalties part. Let's see this one by one. Now, very simple. There is one amendment, one small change which has come in. It doesn't affect whatever you have learned. You have to just erase something that you have learned, and that is this part is not there anymore. Okay, so this part is not there anymore. Okay, so imprisonment for any officer in default, that is OID, they have removed it now. Okay, so how does this go? If there's a contravention of 139 to 146, then the company will have to pay a fine of 25,000 to 5 lakhs. Any officer in default will have to pay a fine of 10,000 to 1 lakh. That is it. Earlier imprisonment or both was also there. Now it is gone. If the auditor is there, then the auditor, remember the penalty if the auditor does not comply with section 139. Okay, no, section number 139, section number 144. Okay, no, or section number 145. Okay, so these sections have been mentioned. Earlier 143 was also there in this. You can simply just put a strike off on 143. They have removed 143 from this area. So they have said any auditor, the penalty will be 25,000 minimum to 5 lakhs or 4 times of the remuneration, whichever is lower. This we had seen in the class. And second is 50,000 to 25 lakhs or 8 times of the remuneration, whichever is lower, if it is willful deceive, willfully if the auditor has tried to deceive. And along with this, there is an imprisonment up to 1 year if there is willfully the auditor has tried to deceive. Okay, so this is still the same. So if the auditor does by mistake something, that is, if there is an error from the auditor's end, then this will be the penalty. But however, if the auditor has willfully tried to deceive someone, that tried to cheat someone, then the green area which is there, that will be applicable. Okay, very simple, very easy. Okay, simple to understand. That completes our company audit revision. Easy. Okay, now let's enter the next part in relation to CARO 2016, which is there for your exam. Okay, CARO 2016 revision we are doing now. Okay, now we'll do clause by clause in a very simple way, very easy. Now applicability, you can easily go through it. We have already done it. CARO 2016, remember, it is not applicable to 8 boss companies. That is section 8 company, banking company, 1-person company, small company, insurance companies, and private companies. Certain private companies it is applicable, but for other private companies it is not applicable. In the class we had done, if it is a Motu private company, that is applicable. If it is a Chotu private company, it is not applicable. Now, what are these Chotu and Motu? That we have done in the class. Okay. Now, coming to the main clauses, let's see this. First of all, we are writing the first part of the code, that is philo. Okay. So for fixed assets, you remember that in relation to CARO, what do we see in fixed assets? Let's just discuss it. Okay. Sir, we have to first see whether the fixed assets are physically verified or not, whether there is material discrepancy in relation to fixed assets. So also if the title deeds of the fixed assets are there with the company or not, this is what we check. In relation to inventory, what do we check? Sir, if there is any material discrepancy in relation to inventory, we'll check that, whether there is any material discrepancy associated with or not. The second thing, we also see whether there is in relation to inventory, whether there are any of the, when we physically verify the inventory, whether the valuation is adjusted correctly or not. Okay. Next is in relation to your loans. So loans, we have two parts. First is loans and advances, which are mentioned in section number 189. Okay, now so any loans and advances that the company has given to any company, firm, LLP, other parties, which are mentioned in section number 189, the auditor has to see the TRP in relation to that. No, simple TRP is what terms and conditions, the repayment schedule, and whether the principal or interest is due overdue for more than 90 days or not. Next is in relation to loans and advances which are given to directors or to other companies under section 185 and 186. So we have to see whether compliance with these two sections have been done properly or not. This is your clause number 1, clause 2. Okay, no, actually the clauses in the exam you should write in this manner. Once again, clause 1, clause 2, clause number 3, and this is clause number 3 is this one, and clause number 4 is this one. Very easy. So first 4 clauses done. Okay, let's go to the next set. Next set is very easy. So next is accepts CSR. So the first word we wrote here, Philo. Just remember that there is a person whose name is Philo. Okay, so Philo accepts, and here I am writing CSR. Okay, accept is nothing but your clause number 5. Okay, so clause number 5 is here, accepts. C is cost records, and S is statutory dues. Okay, and here we have clause number 8, and that is repayment of loans taken. Okay, so let's see one by one. Okay, let's not rush. First is accepts deposits. Okay, so if we accept the deposit, we have to see whether we are complying with the RBI directions. We are complying with section number 73 to 76. We are complying with the any of the rules which are made thereunder. If we have not complied, then in order, if it is given by NCLT or the CLB or RBI, then we have to comply with those orders. That is your section number. That is your clause number 5. Clause 6 of CARO 2016 deals in relation to C. C is what? C is in relation to cost records. Okay, now what do you understand by cost records? Very, very easy. Now see this. One second, please wait. Now what do you understand by cost record? Cost record should be maintained as given in section number 148, subsection number 1. So it is just that much, this much only. Next is your clause 7. Clause 7 divided into 2 parts. First is disputed, second is undisputed. Disputed, undisputed. Okay, so let's see this. Disputed, undisputed. So if it is disputed or undisputed, how do we go about it? Let's see this. First, in relation to disputed or undisputed, first is disputed part. Disputed means the tax that we are going to pay, the government is disagreeing with that. The authority is disagreeing with that. Then we have to mention the amount and the forum where the case is pending. Okay, now the amount involved and the forum where the matter is pending. If it is undisputed, it means I know I have to pay this much amount, but I am not paid. Then if the amount is due for more than 6 months from the due date, okay, no, more than 6 months if it is due as on the last day of the year, basically on 31st March, when I'm on 31st March, if I see that any statutory due is not paid for more than 6 months, correct? Then I'll have to report it here, okay, as the auditor. Finally, we are looking at R. R is very simple, that is repayment of dues. Okay, now repayment of loans. If you have done any default in repayment of loans, repayment default we have done. Okay, no, we had taken a loan, but we have done a repayment default. Okay, no, the repayment of loan default has been done, and the loan was taken from FB God. What is FB God? Very simple: financial institution, banks, government, and debenture holders. Okay, so repayment default if you have done, that is your clause number 8. Okay, very easy. Let's go to the next part. That is clause number 9. So what is this? Philo accepts CSR. So now I hope you get it. Philo accepts CSR if Mrs. Nidis. Now what is this? I is in relation to, if it is a matter of IPO, FPO, then you have the debt instruments, IPO, FPO, debt instruments, and then you have the term loans. Okay, no. So if you have taken any IPO, if you have raised money through IPO, FPO, debt instruments, or term loans, whether the money is used for the purpose for which we had taken the money for, and if it has not been used, then you have to mention the subsequent defaults, delays, and the rectification that is required. Okay, now this is your clause number 9. Then we go into clause number 10. Okay, so this is your clause number 9. Okay, as I say, and this is your clause number 10. Now clause number 10 is what? Very clear. Clause number 10 is in relation to fraud. Okay, so what do we see here in relation to fraud? Very simple. If a person is involved in any kind of fraud, okay, no, if the fraud is done by the company, or fraud is done on the company by any any, what do you call, any director or officer or some person who's involved in the company. So then they are saying here, then the fraud has to be, we have to mention in relation to the fraud. Okay, we have to mention in relation to the fraud. That is basically the amount involved and the, what is the nature of the fraud. That is what we have to say here. That is your clause 10 in relation to fraud. Clear? Then we enter clause number 11. Okay, clause number 11 is what? Clause number 11 is in relation to managerial remuneration. Very simple. We have to comply with section number 197 under section 197 read with schedule number 5. So we have to see whether this compliance is done or not. Okay, then we go into clause number 12. Clause number 12 is needy company. Needy company is two parts. Very simple. If the needy company has maintained a net owned funds to deposit ratio of 1:20, and second is in relation to needy company only, that a needy company should have unencumbered term deposit. Okay, no, so unencumbered term deposit of minimum 10%. That it should not have any, it should not have given any kind of a, how should I put it, any kind of a commitment in relation to at least 10% of the term deposit. That is called unencumbered. Okay, unencumbered term deposits. So very simple code again. See, Philo accepts CSR if Mrs. Needy's relatives. Okay, very simple. Clause 12 done. If Mrs. Needy's relatives prefer a non-cash transaction, Mrs. Needy's, I forgot to write relatives, so I'm just writing here relatives. Okay. Mrs. Needy's relatives prefer a non-cash transaction of 45 crores. You'll understand it very easily. You have attended the lecture, no issues. So here, relatives here basically means what? So relatives means if any kind of related party transaction which are there, whether section number 177 and 188 have been complied with or not. That is what we are checking here. Okay, that is basically this area. Very simple. Just a second. Okay. I think I by mistakenly clicked on erase all. Okay, once again. So relatives prefer a non-cash transaction. I'm writing here NC transaction of 45 crores. So here you understand this is clause number 13 here. Okay, now clause number 13. This is a clause number 14. This is a clause number 15, and then clause number 16. Okay. So here we see relatives. In relation to relatives, what do we see? Sir, if for related party transaction, section number 177 and 188 has to be complied with, whether these have been complied with or not. Prefer means whether when any preferential issue is done or private placement is done, whether it is done properly or not, whether we are complied with the laws and regulations or not in relation to that. Okay. Mainly the section pertaining to that, you know very well in law, it is section number 42. Okay. Then at the end, we are seeing whether any non-cash transaction is there. We are looking at if there is any non-cash transaction, section number 192 has to be complied with. Okay, here it is 42, here it is 192. Finally, 45 basically means if the company is an NBFC, then it should be registered under section 45 IA of which act? Of RBI Act 1934. RBI Act 1934. Okay, this has to be complied with. Now you'll understand this is your clause number, very easy, 13, 14, 15, and 16. That's it. Okay. As simple as this. CARO, very simple. I'll give you time. What you can do is you can just simply look at the CARO provisions, look at the applicability. If any query, please go in the chat area. Go through it very nicely, and then we can go to the further areas. Please go through it. Please go through it. Okay, I'm giving you time now. Please go through it. Till that time, I'll just set up the next chapter slide. Okay, so take 5 minutes, then we'll continue with this. Okay, now let's start with the audit in an automated environment. Let's start with this chapter. Okay. Now, what does this chapter say? Okay, very, very simple, very easy chapter now. Now, only the basics I'm going through this chapter, all the detailed explanation. This chapter is actually about a lot of detailed explanation which we have already done in the class. So let's look at the basic answer which are there. First, what is automated environment? We had done in the class that it is includes IS as well as IT. Okay. The key features, you know this very well. Okay, we had done this. The key features. Okay, remember this. I think we had done the flying from the space story. Okay, now for this answer. Okay, so this is what we have done. Very simple answer and easy points. That is faster business operations, accuracy in data processing and computation, process large volume of transactions, integration between the business operations, better security and control, less prone to human error, provide latest information, connectivity and networking capability. Okay, all these things we had done in the story. Okay. Then you have the relevance of IT in an audit. What is the relevance of IT? Very simple. Computation and calculation, accounting entries, business policies and procedures. Again, we are done in a flow. Reports used in business are produced into systems, and user access and security are controlled by assigning team roles to users, different roles to different users. Okay. So this is what we had done in terms of a flow in the class. There was a points flow which we had done in the class. Okay. Next is what are the situations in which IT will be relevant to an audit. Remember the IRCTC website we had done in a story flow, okay, where the volume of transaction is high, increased use of systems and application, regulatory requirements required by Indian and international standards should be complied. We had done regulation and standards should be complied. Then company policy should be followed, and then complexity of transaction has increased, increases efficiency, effectiveness of audit. Okay, this has to be followed. And finally, high-tech nature of the business, telecom, e-commerce. Okay, so we look at that and then see, okay, whether IT will be relevant to an audit. Okay. Next is understanding and documenting automated control environment. This I had marked as star. This is a very important question. Do it well. What do you understand in this? Very simple, very easy areas. First is information systems being used. And after that, you have the information system purpose. Then your interfaces within the system. What are the interfaces within the system that we look at? After that, you have locations of IT systems. What are the various locations of the IT systems? Then you have architecture, that is desktop based or client server, web application, cloud based, all these things we'll check. Okay. Then you have the information system then you have the interface within the system, and then you have the versions. Which versions of the application are you using? Then you have the key person, that is CIO, CISO, that is the chief information officer, chief information security officer, administrators, all these people. Then you have outsourced activities. When you outsource any activity, there is a risk also, but if the control is there, then it is great. Then in-house versus packaged. This is what we had done. Okay. Now the order in which we did was the order that is given in this diagram. Correct. This is what we had done in the class. Okay. Now what are the various IT risks? This IT risk answer we had done same in chapter number 3. So the same points, almost the same points are there. If you look at that answer and this answer, hardly any difference you will get. Okay. Now after that, we go into this answer. That is basically we had written the controls part. First we'll look into this. Then we'll look into substantive audit, and then we look into the reporting part. So this becomes 2 and this becomes 3 to be written in the examination. So we are looking at the impact on audit. Okay, now, so impact on control. See, tell me, if the controls are not in place, what you will do? You will increase your substantive audit work, correct? If the substantive audit work is not there in place, what will you do? You go for more evidence. If the risk is high, you go for further audit procedures, right? 330. That is more audit evidence is needed. Okay. And finally, you will report here. And even finally, let's say if you're reporting, and in reporting, you have to say that, okay, all these are the faults in the company. What will you do? You will give a modified auditor's report. So all these are covered here. Okay, very simple. Now, next is we understood your IT dependent manual controls, general controls, application controls. Remember, this is only for understanding. It is not there in the module. It was only taught by me for your explanation purpose only. Okay. Now we had seen all these, general IT controls, application controls, IT dependent controls. Simple procedures were there, and this we had learned. This we had properly learned here. So ensure that you're going through it properly. Okay. Now, next area we are going through is testing the methods. Okay. Now, in relation to testing the methods, what is the best method for testing? Best method is re-performance, because you're doing it from start to end again. But it will take a lot of time. See, it is very time consuming, least efficient. So what do? You in the end, you end up with inquiry and inspection. If you do inquiry and inspection, then you will get the most effective and efficient audit evidence. Okay. Now, how to do that? First, understand the matter. Do a walkthrough. And after that, how a user processes transaction at a difference. Now, how is a user obtaining the details? Okay, no. So we'll see, and we'll look at the user functioning on the system. Then inspect the configuration. See what kind of a configuration it is working under. Inspect the technical manual or user manual, and finally carry out a testing. Okay, this is what we'll do. Simple. That is in relation to your testing methods. Okay, this is what we have done. Next, we look into data analytics for audit. Okay, now data analytics for audit is a simple answer. We have done, sir, if we do data analytics for audit, it will, assist the auditor in what all areas, what all should we check beforehand. Completeness of data and population, audit samples, recomputation of balances, reperformance of the mathematical calculations. Mathematical calculation can be, correlated as we saw in the example, and we had taught that in relation to the analytical procedures. Next is analysis of the journal entries as required by SA 240, fraud investigation, and finally evaluating the impact of the control deficiencies. Okay, no, that is what we had seen in relation to data analytics. Now, next area, this is a diagram based. I'll just tell you the headings part, data analytics for audit. Here they have written there are several steps that should be followed to achieve success with CAT. This is the most important part. So if you want to achieve success with CAT, what should you do? First of all, you should do a proper risk assessment. Then after that, you understand and evaluate certain areas. Then see whether the areas are working properly or not. Test the operating effectiveness of it. And only after that, you will end up at reporting. Okay, now, so you have to follow step by step by step. Each of these points, point number 1, 2, 3, 4, and 5. This side, this is actually a common area, so you can cancel this. This is 1, 2. This is 3, 4, and 5. Okay, now, so this side, this diagram. Okay, we have done this diagram in the class, correct? So all these diagrams were done for your, teaching purpose. So you can just go through this diagram, understand whether you have learned it properly or not. Okay, very, very important. Finally, we end up with internal financial control. Internal financial control, we have done it in chapter number 4. Internal control, there we had seen that that a person meets with an accident, goes to the hospital part. Remember, meets with an accident, law and regulation is not followed. Goes to the hospital. Hospital is what? Yeah, it is. It goes to the hospital for an operation. So you'll have the operation here, that is here. See, and then after that, he is transferred to a bed. So he's lying on the bed. Bed is what? Furniture. Furniture is an asset. And then finally, he asks his family members to get the financial reports. This point is there. And then one more point is there in the end, and that is frauds. It is frauds. Okay. So internal financial control is put in place for what? Compliance with the laws, effectiveness and efficiency of operations, reliability of financial reporting, safeguarding of assets, prevention and detection of frauds. Very clear. Okay. Now, finally, there is the reference of various areas in relation to the regulatory requirements. Okay. All this is easy, very simple. This is what we have done in the class. Okay, students, all the very best. Do well in the examination. If there is any query, you can get in touch with me. No issues. I wish you all the best.